Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is perfectly lined up for a decline. This is market analysis for the week of February 13th, 2017. And no, I'm not talking about the equity markets just yet, but I am talking about one market that I will highlight later on in this video. So I'm going to try to keep this video short because my whole family is going through the stomach bug rotation. I almost just said stomach bug, but it's the same thing. And coming out of both ends, you know the deal. So let's just get going here. So the S&P 500, like the rest of the indices, nice pop higher last week. Started the end of the week with a nice day Thursday and Friday. It was kind of it was an up day, but it was more consolidating like than the Thursday candle. Still a pretty nice day. Up 0.4%, whatever it is. So, new all-time highs for the S&P. Trying to short here. Yeah, it just doesn't make sense. Looking at some timing indicators like junk bonds. You can see junk bonds are not at new highs here, because that would be a while to go there. But they are at the top of this loose base here and look like they may want to break out. And the advanced decline line, which I also use for timing. Let me spell it. It would be nice. There it goes. All right. Also not at fresh new highs, and this is technically a divergence when you compare it to the S&P, but it's not like a lower high coming in and a big divergence there. So, yeah, I don't see that as a sell signal. Now, that all being said, okay, I do expect a pullback rather soon. I don't have a sell signal. I don't have everything lined up in this market here or the equity markets, like I said, for a pullback. But we're overbought, so a pullback would not surprise me. And the safer way to play a trend, I'm not saying it's the safe way because it's still risk. That's why it pays so well, okay? But the safer way is to wait for pullback or wait for consolidations to break, like we saw here, like we saw here, like we saw here. Okay, nice two-step pullback here. All right, so, yeah. Are we short-term overbought? Sure. Can we continue to go higher? Abso-freaking-lutely. As a matter of fact, since we are in a strong uptrend, the assumption has to be made in our analysis that pullbacks continue to be buyable. All right, and I know, Trump and all his executive orders and the reaction to the executive orders and what's he going to do next? Well, guess what? The market's still going higher in the face of all that immigration scandal, and yeah, I know the courts wound up upholding the stay and all that, and they're talking about reworking it, whatever it is. There's going to be ebbs and flows through any presidency. My opinion is Trump's going to make a little bit more waves than what we saw late term President Obama because, you know, he's putting new stuff in that has never even been fathomed, even though he made them in his campaign promises. So that could lead to some volatility. But a big, huge spike down just usually does not happen. Usually we don't get the V reverse of the downside. So again, to be clear, I don't have sell signals, but I would not be surprised to see a pullback sooner rather than later. And again, I will be watching that pullback for potential buying opportunities. Here's the Dow Jones Industrial Average. Okay, I passed it. All right, up above, about a little bit more than 1% above that 20,000. Nice push here. I would not be surprised to see it come back and test the 20,000 again. Again, I don't have a sell signal here, but we are getting a little bit overbought. The Russell continues to lag, but also had a nice little pop last 2 days of last week. Coming up testing, just shy of testing the highs. See what it does from here, see how it sets up and is getting ready to move. Here's the mid caps, also at new highs. This is a pattern that I don't think has any greater chance of failing than anything else. But it's just something that I like to watch when you see this little consolidation and it pops up and it looks like it's all clear. This is where traps can come in. So like I said, not a freaking sell signal, but just watch it here if it does pull back. And the Qs, my opinion, they are the ones that are in the most dire need of a rest. Again, not a sell signal, but perhaps a pullback back down to the 20 EMA, maybe even a little further. I mean, it's just running here. So let's look at some sectors real quick. Semiconductors, starting a little bit of a pullback, see if the 20-day moving average holds. Here's clad tanker, small bull flag. Intel had a bit of a dip. Remember, Intel's not as doesn't move like some of the other semiconductor stocks, but you got the hammer right above the 200-day moving average. See if it gets confirmed. Here's Nvidia. Okay, reversed off of 120 here. How about the banks? All right, you got the banking index still sideways, but that PVTB I mentioned a few weeks ago, that popped up to a new high. Again, taking its time, but let's look at the usual suspects here. Bank of America consolidating, JP Morgan consolidating, Citigroup. Yeah, Citigroup's lagging because it's under the 50-day moving average here. So maybe it catches up, or maybe it's, hey, you know what? I'm not going to catch up. Here's Northern Trust trying to bounce here, but again, it has this gap to work. And then you got like a Zion. Looks okay if it decides to break. Here's Bank of New York, also lagging. How about the broker-dealer? Broker-dealer popped up to a new relative high, then had a pause day on Friday. Goldman Sachs, not yet at new highs, but you see Morgan did before it had this little small reversal. Okay, again, it's not a sell signal, just a little small reversal candle there on Friday. Biotechnology. Okay, so biotechnology is, as we talked about Labu, biotechnology is still in an overall channel. It does have a coil here, or a triangle here, that it tried to break out of. We talked about Labu, the biotech bull, and I sent that in an email. You could join that email list at attackthemarkets.com. Anyway, so it broke out, and it is trying to work its way higher, but it certainly is not in a rush to go very far. Let's look at some other stocks. Amazon, right around the highs, trying to coil. Can it pop, or is it going to roll back down to the 50-day moving average? Apple, yeah, this little candle on Apple in and of itself is not a sell candle, but it's telling us that it may be getting tired up here. We tried to push up. It's very stretched here from this gap, and even from the 20 EMA, it's a pretty decent stretch here, so I would not be surprised to see a pullback come in there. Again, I don't really have a sell signal. Google is, yeah, same kind of deal. Had this push down. Now it's kind of correcting here. See if it fills this gap. But watch that, because if it fills that gap and stalls out, that may offer a sell opportunity. Here's Netflix. Little narrow range candle up at the highs as well. I like to look at Caterpillar and John Deere just to mix it up from the tech. Look at John Deere, still very powerful. Highlighted this a few weeks ago in this coil and just broke and continue to go. Again, it's not a huge mover, but what is this, 5% from here, a little less? I mean, still a nice little mover here with John Deere. Okay, what about oil? So oil broke out of its triangle, and I always talk about this. You can watch some of the past videos, but when coils or triangles break out at the very end, they have a better chance of dribbling out and actually shaking and baking before they decide which way they're going to go. So you can see here it kind of dripped out the front and then tripped up the top side, then came back down, held the 200-day. Don't really have a good feel for oil. And then the market that I was talking about in the title lined up, okay, all lined up here. So let's look at gold. Gold declined from July 2016 down to the December low, has gotten a bounce, and I put two Fibonacci grids here, one from the July high and one from the November high. So the one from the November high is into its 62% retracement, and then you have the 50% of the decline down from the July high. So I don't really have a signal yet, a signal that says, hey, it's time to short gold, but it's lined up for a potential signal. So you want to watch this here. If you can get, if this can come up and fail, maybe you can go a little bit higher into this zone. Maybe it'll even make it up into the 200-day moving average. But you got to see a failure candle, some sort of inverted hammer, or even a doji up here, like you saw here on last Wednesday. You look for confirmation, and I mean, maybe that was all she wrote, but the fact that Friday gapped down and then it's trying to push here, a potential piercing pattern here, that maybe it can pop up a little bit here, but if it starts to stall, you want to watch gold, you want to watch GLD or however you trade it, you have a zigzag pattern up here. This could be setting up for a decline here. So that's what I want you to watch. That's the market that I referred to in the title. All right, so kept this one short and sweet to just over 10 minutes. But again, let me recap. We are overboard here. I am looking for a pullback, but I do believe the pullbacks will continue to be buyable in the equity markets. I do not have a sell signal yet, but watch for one. Gold is lined up for a nice potential sell signal. Just wait for the candle or wait for the pattern. I will talk about it in the daily email, so sign up at attackthemarkets.com. It is free to join. Any questions, tiny@attackthemarkets.com, and I will talk to you soon.